Okay, let's get started. Welcome, everyone. My name is Ken Cerini, Managing Partner of Cerini Associates. I'm joined today by Tania Quigley, one of my partners, one of 5 partners in the nonprofit group over here at Cerini. We spend a lot of time working with nonprofit organizations, and we feel it's super important to kind of give back through education and training like this. We try to do our board training once a year, so welcome to our 2024 annual board training. Before we get started, just a couple key administrative things. Obviously, we can't see everybody, so it makes it really hard for us to kind of have this open dialogue. So if anybody does have any questions, please just throw them in the chat. I prefer to use the chat rather than the questions. In the chat, we can kind of monitor that throughout. So if anybody has any questions, please throw them in the chat. We'll try to get to as many of them as we possibly can. Again, if people want to start dialogues in the chat while we're talking on certain topics, feel free to start dialogues. We'll try to incorporate some of that and try to make this as fluid as humanly possible. In addition, we will be recording today's session, and we will be sending out over the next few days the recording of today's session. So please feel free to share it with any other board members or anybody else you know. We'll also be sending out, along with the recording, we'll be sending out the 3rd edition of our board guide, which came out earlier this year, and we'll also be sending out our new fundraising guide. So again, we constantly want to make sure that we're pushing out information to the field. We totally believe in the nonprofit sector, and we want to make sure that we do as much as we can to kind of help the sector. I do enjoy everybody kind of throwing in little comments and names and everything else, so that's kind of awesome. So let's get started. So when we talk about nonprofit organizations and we talk to them, we ask them, like, what is it that you're looking for? I would say that most nonprofit organizations that we talk to kind of throw out there that the first thing that they're looking for is discretionary funds, right? Everybody wants more discretionary funds. But secondly, they're looking for effective board members. And I think that's one of the greatest challenges we're seeing out there in the nonprofit sector is the nonprofits having a tough time attracting and retaining board members, and not just board members, effective board members. And then also once they have them in, how do you keep them engaged within the organization? I mean, let's face it, at the end of the day, their board members are volunteers. Right? You guys are all volunteering for the organizations that you work with. And while you might have great intentions, life gets in the way. So it's kind of hard to find those board members who are going to dedicate a large level of energy and effort to the organization. You guys are here, so you guys are the exceptions. But how do we go about finding and attracting effective board members? So we're going to talk a little bit about that today. Also, it's important, I think, when you are bringing in a prospective board member, that there are certain things that get done. I mean, first of all, it's, I think, important for board members to understand what their roles and responsibilities within the board are going to be. What role do they want to play within the organization? I think a lot of times we automatically assume that if you're an accountant, you want to come in and be the treasurer of the organization. If you're a lawyer, you want to come on the board and practice law with respect to the organization. And a lot of times that's not what board members want to do or prospective board members want to do. So I think it's also important to find out what it is those board members want from the organization. And then I think also we have to try to make sure that as we go through the process of running board meetings and everything else, that we're looking at ensuring that those board meetings are efficient and effective. I think that's part of the problem. I mean, I've been involved with organizations where board meetings last for 3-4 hours. I mean, that's kind of, tough for a board member to sign on and then have to sit through long board meetings. Also, when you get to board meetings, are boards talking about the right things? Are they focusing on the right things? How much of the energy is focused on stuff that they shouldn't be focusing on, and how much energy at board meetings is really focused on stuff that boards should be focusing on, the important stuff? So again, we're going to kind of touch on a lot of these things today. So the first thing I really want to start with, though, is I want to start with board member agreements. I don't know how many of you guys have board agreements that you guys require each board member to sign. If you guys want to throw into the chat, feel free. But I think it's super important to have board member agreements. I think the reason is that a lot of times, if a board member doesn't necessarily know what their responsibilities are, it's kind of hard for them to know whether they can take on that role of a board member. I think what makes board member agreements super effective is the ability for you to kind of communicate within a document what the responsibilities of the organization are and what the responsibilities of the board are, of each board member is. And again, I think that document is a good two-way street where it does talk about the joint responsibilities and each person's responsibilities. I think that's super important to have that in a document. In addition, it is an agreement. So you're in a situation where the board member is signing it. And anytime somebody puts their name on something, they're much more likely to take it seriously and to take a deeper responsibility to what they're saying they're going to do. So what is a board agreement? A board agreement is an agreement between a nonprofit organization and a prospective or a new board member. And what it does is it kind of clarifies the expectations and responsibilities of the board members and the organization to ensure that everybody understands their roles and commitments. So some of the key components of the agreement are, again, board member responsibility, things like how many board meetings are you expecting them to attend, what percentage? So are they expected to attend 75% of all board meetings or whatever? What is the organization's financial commitment, otherwise known as, I hear all the time give or get, but I like give and get. I think every board member should have a responsibility to make some level of contribution to the organization. It's really hard for a board member to go out and ask other people to donate to an organization that they're involved in if they're not donating themselves. So I really think it's important to have a give and get. And I also think that in today's environment, and we'll talk about it a little bit more when we talk towards the end of the presentation about the evolution of what the board looks like today. I think in today's environment where board members are brought on for different reasons, they're not necessarily just brought on to help support the organization, but they're also brought on because of their ties to the community or their knowledge of an industry or whatever it happens to be. I think the days of requiring everybody to give the same amount in terms of that financial contribution are gone. I think it really comes down to everybody should be giving what is appropriate for them. And I think that's what we're seeing more and more within boards. Some of the other things that should be in the agreement are they required to attend fundraising events and how many of them? Are they required to serve on committees? All of that stuff should be laid out on all of that stuff. And then also from an organization's perspective, there should be a responsibility for the board to provide timely information. I think one of the issues that we see most often with boards is that board members are getting information the day of the board meeting and they don't have the time to go through it and review it so that the conversations are not really as deep and meaningful as they should be. So there really should be a commitment to get information way before a board meeting takes place, making sure that board members have proper officers, directors and officers insurance coverage, and ensure that board members have access to necessary resources for decision making. There should be a central place where important documentation is kept. Somebody had asked, how do we correctly remind members of their give and get responsibilities? I think that comes down to the responsibility of the board chairman. It's really hard for management to go to a board member and say, hey, you said you were going to bring in X number of dollars or whatever. I think it really comes to the board to self-police itself, and that starts with the board chairman. So some of the benefits of implementing an agreement, as we kind of mentioned already, it helps board members determine if they can kind of meet the expectations of being on the board because they clearly understand what the roles of being on a board is, right? So that's super important. It also helps board members to become more fully committed because, again, as I said, they understand what their roles are. They knew what they were going into it. They signed up for it and they signed it. So they're much more likely to kind of focus on that. It helps to address inefficiencies by ensuring board members fulfill their obligations, again, because they understand or better understand their responsibilities. They understand the importance of meeting those responsibilities and what it means to the organization. And it also makes it much easier when you have ineffective board members to remove those ineffective board members from the board. Because, if they're not meeting the requirements of the agreement they signed, it becomes much easier for you to kind of remove them from the board.
Okay, I'm going to go over the 3 duties of care, loyalty, and obedience. So as a board member, these are 3 fundamental items that you should be aware of and always keep in mind as you are, attending board meetings, any kind of responsibilities that you have or work that you're doing for the organization. So the first one is duty of care. So ensuring proper use of assets. Does the organization have policies in place to prevent any waste or misuse of assets? It could range from, cash accounts to investments, use of property and equipment, making sure that those assets are used for the mission and to prevent any type of waste. Diligent oversight of the organization's actions, monitoring those actions, the organization's policies, the management's actions, making sure, again, that, items of policies and procedures, everything's being in line with the organization's mission. Understanding operations. So as a board member, it's important to understand the operations. That's what you're overseeing. That's what you're making decisions on, reviewing internal policies in place that are geared towards the operations of the organization. So, what kind of programs are being run, the different staff levels, seeing who's, overseeing who and taking care of certain aspects of the organization's operations. Different funding sources. So organizations can receive funding through several different sources. It could be contributions, grants through private companies, foundations, government grants, fee-for-service programs. So there's all different types of funding sources that a board member should be made aware of because there are certain reporting requirements that are linked to those funding sources. And regulations go hand in hand with that. The organization is a 501c3, making sure that the organization is, compliant with the IRS, New York State, or any other states that the organization may be registered with. And again, maintain fiscal oversight, overseeing that the organization is providing you as a board member with the financial information you need to, provide any feedback for how the financial picture of the organization is and, to properly monitor that funds are being used properly and operations are running smooth. Identify and prevent potential fraud or mismanagement. So again, having that understanding of operations, policies in place, the internal controls of the organization can help you identify or, maybe see that there's potential fraud or mismanagement. What are the policies in place over use of company credit cards? Who has access to bank accounts? Who can make transfers out of investments? So just being aware of all that information can, help you identify and carry out this duty of care. Duty of loyalty. So again, as a board member, you're acting in the best interest of the organization. You're there volunteering to help the organization succeed, avoid any kind of personal gain from assets or information. So disclosing any potential conflict of interest that may be there, when you make decisions on, when you vote on decisions for the organization, making sure that they're in the best interest for the organization and not yourself. Same thing with information. So the organization, the board, as a board member, you have access to information that is sensitive, whether it's information about employees or consumers that you have in your programs, any legal matters, donor information. So making sure you're obligated to make sure that remains confidential and within the organization. Ensuring competence of the organization's leadership. So your executive officers, your CEO, CFO, evaluating their effectiveness. They're the one that are reporting to the organization, to the board members. So making sure that they, are giving you the information you need to carry out your responsibility as a board member. How are they running their programs? How the operations, throughout the year are carried out by the officers. They're the ones in the day-to-day of the organization, so they're more involved and they have a lot more information that they should be sharing to a board member to make sure that the mission and the programs and everything is running as smooth as possible. Disclosing any conflict of interest and ensuring decisions are made in the organization's best interest. So that's a key trend, thing here is that, again, everything is in the best interest of the organization. Put any of your own self-interest aside of what you may think is best for the organization if it could personally benefit yourself. Again, everything should be best interest of the organization. The disclosing conflict of interest, that should be done on an annual basis at least. The organization should have a conflict of interest policy, and we'll talk about that more on later slides. And that conflict of interest policy lays out the procedure for disclosing conflict of interest, voting on the matters that involved that conflict of interest. And that's something that board members should be reviewing and signing as they join the board, and at least on an annual basis. Duty of obedience. So adhering to laws, regulations, and ethical standards in all actions. So the organization the board members should be making sure that the organization is following state laws, federal laws, local laws, making sure that the organization's filing its 990, meeting all the state requirements for, financial statement audits, reviews, regulations, similar to making sure that the organization is filing requirements based on your funding sources. So if you receive Medicaid, that you're properly filing your consolidated fiscal report on an annual basis. If you receive federal funding, ensuring that the organization is complying with those compliance requirements for that federal funding. And when the organization receives over certain federal dollars, there's a requirement for uniform guidance. So making sure that the organization is aware of that and, going through that process. Establishing policies that support the organization's mission and sustainability. So knowing what the organization's mission is, what it was formed to do, that's in the organization's articles of incorporation. It's in your bylaws. It would be good to kind of go over the mission at every board meeting, maybe just, reiterate what, the organization was formed to do. And making sure operations are being carried out for the mission and not deviate from the mission. Sustainability, does the organization have assets? Are there plans? Is there strategic plans in place to make sure that the organization is sustainable for the foreseeable future? Board members change, management changes, so making sure there's plans in place to ensure that any types of those changes are in a smooth transition. Ensure proper governance and regular communication with compliance officers. So organizations that have certain fundings, such as Medicaid, have compliance officers, and it's good to have meetings on a regular basis between board members and these compliance officers to make sure that any items that the compliance officers are aware of, it gets communicated to the board of directors, so decisions can be made and actions can be put forth to best, identify and clear those issues that are made aware by the compliance officers, making sure that your organization is compliant with all its funding regulations, operations, that, again, what the organization was formed to do.
Before you shift a second, so first of all, Judy, thank you for putting clarifying comments into the chat. That's super great. In addition, a couple little things Tania mentioned about discussing or understanding the board mission, or kind of going over the board mission at each board meeting. One of the things I kind of tell my clients that I like them to do is just have that mission statement or the board mission in front of you at all times when you're sitting at a board meeting, so that when you're going through and you're making decisions at the board level, all of those decisions should be made through the lens of the mission of the organization. I think that's kind of super important to make sure that you are thinking of the organization first. You're thinking about what's right for the organization. You're thinking about what's right for the people that the organization serves. or the mission, other aspects of the mission of the organization. In addition, Tania was talking about under duty of care, safeguarding of assets. One of the things that we've been seeing a lot of, and we've been talking to our clients about, is a lot of organizations might be sitting on some level of cash, and those cash balances aren't necessarily being invested in higher yielding money market accounts. A lot of the banks aren't going to offer you, 3-4%. They're just going to put it in a very low yielding money market account or savings account. So you have to actually ask the banks. And we've had a few clients move money into a more effective investment vehicle, which has yielded some bigger interest rates. So just something to think about. So we want to talk a little bit about some of the key responsibilities of you guys as board members. So we have 10 of them listed here on the next 2 slides. And if you listen real close, I'll give you a bonus 11th one. So first of all, it's important to define the organization's mission and purpose, right? We've been talking about that over the last couple of slides. It's really important to really understand and set goals for the organization. You want to set the overall direction of where the organization is going. You want to constantly look to make sure that you're staying on track with respect to what the organization is supposed to be doing. Organizations' missions change, or you could have some of the operations change where there's a certain level of maybe mission creep that takes place over time. So it's really important, as Tania mentioned, on a regular basis to go back and look at the certificate of incorporation, look at the bylaws of the organization to really gain an understanding of whether the organization is staying true to its overall purpose. We've seen instances where organizations have tried to do, during COVID, where they tried to do really good things, where you had an organization that said, oh, during COVID, we want to kind of help our neighbors, and we want to provide food or whatever to some of the community members who don't have access to it. If that's not part of their nonprofit purpose, they really can't be doing that. So it's really important that you take a look and you make sure that everything you're doing is kind of in line with what your certificate of incorporation says. Choose and evaluate the CEO and set compensation. Tania mentioned that earlier. It's amazing how often I see that boards do not do reviews of the CEOs of the organizations. The CEO is an employee of the organization, and like anybody else, they should have an annual review, at least annual review that takes place. And that should come from the board who's, providing direction and everything to that CEO and should be delivered by the board chairman. It's super important that, every CEO of an organization goes through some level of at least annual review. It's also important for the board to ensure that the organization's, that there's job responsibilities and goals established for the CEO. And those job responsibilities and goals should be looked at on a regular basis. Organizations go through life cycles. And what's important to the organization today might not be the same thing that's important to an organization 5 years from now, because the organization's focus has changed or something about the organization has changed. So it's really super important to make sure that you're reviewing the CEO's job responsibilities and goals on a regular basis and making sure that the board and the management's goals are aligned. And then also compensation. Determining appropriate compensation of the CEO is also important. How do you go about doing that? Are you going to do a salary study? Are you going to look at 990s? Is there going to be a contract involved? How is all of that laid out? How are you determining the compensation? Is it appropriate compensation? And how do you determine it was appropriate compensation? And is that all documented? It's important for the board to support the CEO. The CEO is put in place to run the organization, but the direction comes from the board of directors and the policies come from the board of directors. And there needs to be that open communication, open dialogue between management, the CEO, and board, usually through the board chairman, where the CEO and board chairman are meeting on a regular basis to have that open dialogue to ensure that things are going in the right direction. I can tell you I've been involved with a lot of boards where the board comes and they meet once a month and they leave after the board meeting is over, and it's like time stood still for a month. They do nothing, nothing happens, and then they come back the next month and they meet for an hour or two and they leave and it all happens again. There's emails flying from the CEO asking questions during the course of the month, and it's like pulling teeth to get the board to respond to things. If you're going to put the CEO in place and you're going to give the CEO responsibilities, you got to be there to support the CEO and make sure that you're responding and helping the CEO get through what they need to do. Planning, again, going through that whole process of strategic planning, setting goals for the organization, understanding the direction the organization is moving in. What are you going to do in terms of funding and everything else? In order to do that, though, in order to perform effective planning, you really have to, or the board really has to understand what the organization does and how the organization does it. So as part of board meetings, there should be some regular ongoing training or understanding of the programs that the organization runs, how those programs are funded, what are the driving indicators with it, so that the board truly can fulfill its fiduciary responsibility by understanding how the organization works, so that when they're making decisions, those decisions are informed decisions. Next is monitoring and strengthening programs and services. Again, I think a lot of times boards and organizations look at an organization on a global basis instead of maybe kind of diving a little bit down into more of some of the details and really understanding how programs are doing. Are the programs really in line with what the mission of the organization is, or are some of the programs kind of outside the core mission of the organization? Should they really be part of the organization? Should they not? Are they effective? Are they relevant? Are things changing within the world that maybe we need to change how we're looking at our organization and look at things a little bit differently? So those are all things that we should be kind of focusing on at the board level. Tania? Ensure appropriate levels of financial resources. This is where fundraising comes into play. It's part of the board's responsibility, as I mentioned earlier, to give and get funds for the organization. And as I said, somebody had asked earlier about, how do you keep board members on task? It is the responsibility of the rest of the board, and it is the responsibility of the board chairman to ensure that the board is fulfilling its obligation. We're finding more and more that fundraising is super important because a lot of the government funding just isn't cutting it anymore, and organizations have needed to dip into the fundraising marketplace. And it's gotten so competitive, and we'll talk about fundraising a little bit more later. Fiscal oversight is super important. The board is responsible for understanding and overseeing the fiscal oversight of the organization. That includes ensuring that on an annual basis, there's a budget that gets created. That budget should really look at not just things on a annual basis, but on a monthly basis, and it should really align with how the operations of the organizations work monthly. What I mean by that is, if I have a big fundraising event in November, I shouldn't say 1/12 of all my fundraising is going to come in each month. November is when that fundraising is expected to come in. So November is when that should be on the budget. Because otherwise, what ends up happening is when you go and you do your monthly budget to actual comparisons, you're going to be sitting in a situation where you're saying, oh yeah, we didn't hit budget because that doesn't happen till November. And then when you get to November and you don't hit budget, it's too late to kind of react and stuff. So it's really, really important to really align your budget with the true operations of the organization. It's really important to not just create a budget, but then to use that budget. And I've heard Judy Siegel kind of talk about this in the past, kind of use that budget as a guardrail for the organization so that the organization from a fiscal perspective doesn't run off the road. So you can kind of use that, the budget to kind of provide focus for the organization so the organization understands what the spending should be. And then by looking at budget to actual comparisons on a monthly basis and understanding why there are significant variances, it really helps the organization to stay kind of in line with that budget. The other thing I think is super important is at the time you're creating your budget, is to create contingency budgets. And I think contingency planning is important, because what it does is, especially if boards are only meeting, let's say, quarterly, it allows management to kind of get approval from the board up front that if we're not hitting our numbers, if the numbers aren't kind of getting to where they need to be, the board has already approved a contingency plan that management can go and do something quickly, so that they don't have to wait until the next board meeting or call an emergency board meeting to make a change. It's part of the board's responsibility to develop new board members. I mean, the board's responsible to go out and find potential new board members, assess what the board needs in terms of board members, find new board members, bring board members in, evaluate whether they'll be effective or not, get them onto the board, keep them engaged, and then if they're not effective, work towards removing them from the board. So the board really has a responsibility to kind of help develop new board members, but also police existing board members. Ensure that the organization is meeting its legal and ethical requirements. As Tania mentioned, you have things like conflict of interest, you have rules and regulations and everything else. All of those things are things that the board needs to continue to understand. And then board members need to be advocates for the organization. They need to go out and be ambassadors. So if you're in a situation where an organization is having a difficult time with funding, like right now, if anybody is in the early intervention world, early intervention was supposed to get a 5% rate increase back in April. It was in the budget, state budget. They still haven't gotten it. And it looks like they might not get it until sometime later. So if you're on a board of an organization that's in early intervention right now, you should be talking to or reaching out to any politicians you know. You should be advocating for the organization in order to try to get that 5% funding. And then I said there'll be a bonus. Another thing that an organization needs to do, or board members need to do, is to really understand and consider and mitigate organizational risk. All right. I mean, we're big proponents on organizations having risk committees. And where risk can be kind of considered. It could be part of your audit committee or part of another committee, but there needs to be some place where risk is being considered on a regular basis. Because you got things like IT, cybersecurity issues like that. You've got insurance, you've got funding level concerns and issues. You've got potential lawsuits, and what can you do to mitigate lawsuits? Tania mentioned you have compliance officers, and making sure that you understand what's happening on a compliance perspective and whether the organization's meeting compliance. Regulations and laws, employee matters. There seem to be new employment-related laws coming out on a weekly basis. Are there any risks from a government audit perspective? All of those sorts of things are things that should be considered from a risk-based perspective. Next.
Okay, I'm going to go over best practice policies and procedures for nonprofit boards. So the more policies in place at the board that the board implements, the better, especially as a lot of this information is reported on your 990. It's what the public is open for the public to see. So the more policies, the better. So mission and purpose. Ensure the board is aligned with the organization's goals and missions. So again, always being aware of what the organization's mission is, what your goals are. The organization can set goals on an annual basis for meeting certain fundraising requirements, or reaching, obtaining certain metrics for your programs. So the board, being in line with the same goals and missions as management, and overseeing that progress is an important procedure to do throughout the year. Review the Form 990. So implement a process for reviewing the 990 before its filing to maintain transparency. So as a board, you have a responsibility for making sure that the information on that 990 is accurate, for reviewing it, being able to provide any comments or questions to management or to the preparer of the 990, and setting some time aside to be able to review it, and possibly have a meeting to go over questions. So sometimes the 990s are made available, close to the filing deadline, so there might not be that sufficient time to review. So it's best practice to try and make that happen to where that the board can review the 990, ask questions, and update certain aspects of the 990 that would benefit the organization, as this is a public document. And I'll be going over some of the pages on the 990 on later slides to kind of highlight, what's best practice for reporting on the 990. Your conflict of interest policy, again, this is a requirement as if you're a New York not-for-profit organization. So that governs the independence of directors, prevents biased decision-making. So having this policy at the board level and, where management follows as well, make sure that, everyone's aware of what is considered a conflict of interest. Again, being able to identify how that could impact the organization, what the procedures are if there is a potential conflict of interest. Again, when it comes time to vote on the decision to, move forward with this potential conflict of interest, again, everything's in the best interest of the organization, or not the person of interest would be excused from voting on that decision. So having that conflict of interest policy in place, monitoring it, making sure that it's just, not signed once and done, but always on the mind of board of directors and management.
It's just real quick. It's important if you have conflicts. Not every conflict is a bad conflict, and that's what you got to kind of think about. I mean, think about it. If I have a board member and a board member wants to, provide me a warehouse to use for my organization at a monthly rent of $1, that's not a bad conflict, right? It's a conflict that exists, but it's good. It's something that we want to possibly avail ourselves to. So it's just really important that everything is documented. The decision-making is documented. The process that you went through was documented. If you are accepting that the space, for $1, just document that this was looked at, vetted, no environmental concerns or anything like that you have to worry about, and all of that. Also, kind of keep in mind that if you are going to be entering into an agreement with a related party, you really should be doing your due diligence to ensure that the related party pricing is appropriate pricing for the organization, right? I mean, it shouldn't just be a board member says, I'll do it for this, and you say, okay, that's great. You got to go out and find out if the price that the board member is doing it for is equal to or better than fair market value. Sorry, Tania, go ahead.
Okay. Having a whistleblower policy in place. This can protect the employees who report misconduct from retaliation. So at the board level, you want any kind of information for actual misconduct, potential misconduct to be communicated without the employee's fear of retaliation, whether they become terminated or demoted or adjustments to their salary. So having this policy in place is comfort over the employees to know that they can communicate anything that they become aware of to the right people, to the board. Document retention and destruction policy. This is important to have because it gives you a guideline of what documents need to be retained for a certain period of time. Some documents need to be retained indefinitely. So your articles of incorporation, your bylaws, your 1023 application, and certain things are on a certain time period, 7 years, your 990, payroll tax returns, bank statements, bank reconciliations, invoices, checks, deposits. So having this policy in place, make sure that the organization has the documents it needs if it was to ever need to provide those documents for any regulatory reasons. And then in addition to retaining your guidelines for retaining important documentation, it also includes disposing any unnecessary documentation and how to correctly dispose of that documentation. So client files that have sensitive information on there, you just can't just toss them in the trash. They need to be disposed of properly, and that policy will outline how that's done. Compensation approval. Ken touched up on this, the previous slides. The ensuring that the CEO and any key employee compensation is independently reviewed and substantiated. So again, doing in the salary studies, making sure there's some kind of maybe a salary agreement comparing the organizations to other similar organizations, reviewing their 990s for their top management salaries. What else does compensation include other than just your salary? Does it include benefits such as employer contributions to a 403B plan or a 401k plan? Is there a car allowance? Not only does compensation include your salary, but also includes benefits as well. And that whole package should be reviewed and approved by the board. There could be an executive committee or a compensation committee that could handle, the brunt work of determining that compensation, and then it gets proposed to the board for final approval. Transparency. So as a nonprofit, you're open to having the public review these documents, such as your 990, your conflict of interest policies, any kind of board policies, your articles of incorporation, your bylaws, your financial statements. All that information is available to the public, and how the organization makes this available to the public is really important in action and how it's documented on the 990. So the 990 has a whole section about making this information available and describing it in Schedule O to the 990. This is also super important for organizations such as Charity Navigator, because they look at this information that's explained on the 990 and provides better ratings for a nonprofit that are more transparent in making sure that this information is available to the public should they request it, or put it on your website. So an easy way to make your 990 and your financials available is to just post it on your website that are available as anyone comes to visit the website. Board meeting minutes. Maintain thorough records of board and committee meetings. So every meeting with the board, every meeting with your committees, whether it's a fundraising committee, finance committee, executive committee, the minutes should be maintained and documented. This is very important because it documents the decisions and discussions of the organization. If it wasn't documented, then it didn't occur. So making sure that these minutes are taken and reviewed for our board for our nonprofits that we audit. We see that the board always reviews the previous minutes and approves them. So this gives the board a chance to, again, review those minutes, identify if anything that had been written down incorrectly, the opportunity to correct that, and then do a final approval. Having an investment policy. So this policy will establish guidelines for responsible investment and asset protection. So you don't have to have investments, an array of investments to have an investment policy. You can have a money market account, you can have CDs, but ensuring that there is some kind of investment policy helps the organization or has a documentation for the organization to guide its way through how to invest. Your spending policies as a nonprofit in New York, you have to follow NITMIFA. It's New York Prudent Management Institutional Funds Act, and that provides guidelines for responsible investing. What is your risk appetite for investing, donor funds or funds that are additional funds that are set aside by a board of directors, quasi endowments, the use of the funds of the income that's generated off those investments. So having a policy is very important, and if you don't have one, it would be highly recommended to establish one. A gift acceptance policy, we don't see very commonly, but it would be important to have a gift acceptance policy to ensure that the donations you receive are in line with the organization values and missions. So, what could be the policy for receiving donated stock? Does the organization need to liquidate it immediately to get the value that it was received for, or should the organization reinvest it to hold for long term? Donated properties, such as, a donated building or land was given to the organization. The policy would guide how the organization should accept that. Is there any environmental liabilities associated with that property? Does it best in line with the mission of the organization? Is the organization able to benefit from that donation, or is it too much of a cost burden to accept the donation? So items like that. And that is something that is a question on Schedule M to the 990, if the organization receives a certain dollar amount of non-cash donations. Some additional considerations here, policies for local chapters. So an organization that is a local chapter or is a national organization that has local chapters, policies in place to make sure all your chapters are operating under the same mission, how they should be handling the reporting requirements, financial reporting, maintaining budgets, membership, all that should be outlined within the local chapters. Joint ventures. So this is common for non-for-profits to join together to work on a specific program or, any kind of idea that comes to mind that would benefit both organizations. So does the joint venture, having a policy to outline that, yes, the joint venture is appropriate. Does it make sure that the organizations are still in line with their mission to keep them, within their 501c3 status, and then it doesn't benefit any one individual of that of either organization. AI use. This is a lot more common now. So, should there be a policy on artificial intelligence use for technology? What use could that use to benefit the organization, or could it be unbeneficial to the organization? So determining how the organization can take advantage of that and put policies in place for the board to be able to incorporate. Same thing with management and the staff of the organization. And legal review for compliance. So making sure that the organization has all their policies and procedures and everything on the 990 is 100% accurate to the best of their knowledge, to make sure that they're in compliance with everything that they need to be compliant with on the 990, annual reporting requirements, financial statements, state filings and such.
Before you switch, a couple little things I want to talk about. On the board meeting minutes, there's a little note there: be careful if you're recording the board minutes. The board information, if you're recording, you have to be really careful, because if you've got a full recording of I typically tell my clients, you want to kind of do a transcript of the meeting. You want it to be kind of touching on high points and enough detail that's necessary. If you're going to record it to facilitate the documentation of the minutes, please make sure that you delete the recording afterwards. We're seeing a lot of organizations now using AI to record the minutes, record the meetings and write the minutes. Again, just please make sure that all of those recordings are eliminated afterwards. You have to be really, really careful about that. Tania talked about the investment policy. If you have endowments, you also should have a spending policy in place, which dictates what portion or how much of the endowment is going to be spent on a regular basis. That's also required under NIPMIFA, which Tania talked about. And then from a joint venture perspective, one of the things you also want to think about is when you enter into a joint venture, it could be a joint venture with a nonprofit or with a for-profit organization. Just be careful that as you're going through that, as part of your policy, you're considering such things as reputational risk and reputational impact of doing something like that. You want to make sure that you understand who you're entering into a joint venture with and what impact that may have on the overall organization. We can't have a board training as accountants without talking about fiscal matters. Sorry, we're accountants. So just a couple things to kind of think about. I mean, one of the things that we see all the time is you typically have board members, and I think the area that board members feel like they know the least about is the fiscal aspects of organizations. So it's really, really important that to understand the organization's programs and operations, not just from an operational perspective and how they work and what they do, but also from a fiscal perspective. How do you, as I said earlier, how do you generate money from it and everything? Because if you don't understand the organization's operations, you don't understand how the organization generates its funding, it makes it very, very difficult for the board to have a true understanding and picture of the organization so that it can make proper fiduciary decisions with respect to that organization. So first thing I'm going to touch on is just, what are the main statements that a nonprofit financial statement contain, right? So if I have a financial statement in the for-profit world, there are three key statements. You have a balance sheet, a profit and loss statement, and a statement of cash flows. Nonprofit world, we have four statements. We have the statement of financial position, which is basically your balance sheet, which really looks at your assets, your liabilities, and we don't have retained earnings. We have net assets, which is basically the same thing. It's kind of your assets in excess of your liabilities. You have your statement of activities, which is your profit and loss, which looks at support and revenue. So revenue is going to be anything that you earn, basically what's known as an exchange transaction. Support is really your fundraising and stuff that's coming into the organization. So that's really the money that's coming in. That's how you derive, the inflows of resources. Then you have all your expenses going out, and then you have your change in net assets. And that's really, again, your profit for the year is your change in net assets. You have your statement of functional expenses. What the statement of functional expenses is, that's a different schedule that does not exist in the for-profit world. What that does is it looks at your expenses by natural classification, things like salaries, fringes, rent, utilities, and it breaks those expenses up between program, administrative and general, and fundraising. And the reason that's important is it's really important to understand from an organizational perspective how much of the organization's resources are being filtered back into the programmatic aspects of the organization or the mission of the organization. That's something that donors really look at, donors want to understand. So that's where the statement of functional expenses comes in. And then your statement of cash flows, which basically what it does is it reconciles the profit and loss that you have at the organizational level to the change in cash. So it considers non-cash items, it considers repayment of debt or borrowings, it considers purchase of fixed assets. So all of those things kind of come into play to kind of show how you went from the profit and loss down to the cash. And then you also have your footnotes, and your footnotes, the purpose of the footnotes is to kind of outline and provide more insight into the numbers that are on the financial statements. So one of the things that boards should do on an annual basis is they should be meeting with the organization's auditors. So if you have in New York State, if you have over $250,000 worth of revenue coming into the revenue and support coming into the organization, you're required to go through a financial review where your outside accountant provides limited assurance over the financial information. And if you get over $1 million in New York State, you're required to have an audit. Other states have different thresholds, but those are the New York State levels. If you are going through an audit, you should be meeting with your auditors on at least on an annual basis after the audit is done, so that the auditors can go over with you some of the key elements of the audit. There are certain required communications that auditors should be providing to management and the board. Things like what are the significant estimates, what are the significant risks involved with the organization, what level of adjustments or contributions were there any findings with respect to the control environment, and if there are any findings, those would also appear then in a separate document known as a management letter. And I think it's important for the board to understand where there are control deficiencies within the organization, because then that goes back to what we talked about earlier with respect to risk and understanding risk. And then also, obviously, understanding what the financial results of the organization were. How do those financial results compare to what the board got as information throughout the course of the year? So the board has an understanding of the reliance on information that's coming to them on a monthly or quarterly basis. So it's really important that there is that discussion, especially since your auditors, if they work a lot in the nonprofit field, can give you some insight into how you stack up and benchmark against other organizations. And then also, we're big proponents on looking at things from a trend analysis perspective. So not only do you want to understand how your numbers stack up against other nonprofit organizations, but you want to understand how your numbers stack up over the last 2 or 3 or 4 years of your organization to find out if the organization's kind of moving in the right direction, or what are the risks that the organization has to worry about. We find that a lot of times we go and we sit with boards to do a presentation, and we're told, oh, you got 10 minutes, you got 15 minutes. You really should be investing a little more time in that conversation with your auditors. If a deep conversation is happening at a finance committee or audit committee meeting, then that's fine. You may not need to spend as much time with the auditors. But if it's only happening at the board level, then you really should dedicate a little bit more time to that conversation with the auditors. Sorry, that's my little soapbox there. I'll get off it now. So what are some of the key things that board members need to understand with respect to the audit? So the first thing is the financial statements are really the organization's financial statements. The only part of the financial statements that really belong to the auditors is the auditor's opinion. And what you're looking for is what's known as an unmodified opinion. What that basically is a clean opinion. It indicates that the financial statements are in accordance with generally accepted accounting principles in the United States of America, and that the financial information is free of material error. So that's kind of what you're looking for. Understand that I said that it's in accordance with US GAAP. GAAP requires the organization to follow the accrual basis of accounting, not the cash basis. We find that a lot of our clients use cash basis throughout the year, so that the board is getting cash basis information. And then when we come in and we do the audit, we convert that from cash to accrual. Accrual basically records revenue when that revenue is earned, as opposed to when you receive the cash. And it records expenditures when they're incurred, not when the cash is laid out. So you're going to have things like receivables and payables under the accrual basis of accounting. From a net asset perspective, net assets are divided into multiple categories. You have net assets with restriction and net assets without restriction. Please understand that only a donor can restrict net assets. Boards cannot restrict net assets. Boards can designate net assets, but only a donor can restrict net assets. What you really want, and we're seeing a lot more organizations getting restricted gifts, you really want is unrestricted gifts, because unrestricted gifts or donations without restrictions, or net assets without restrictions, are for the general use of the organization. Those are good net assets because you can use them for any purpose you want. If you have net assets with restrictions, those restrictions could be either time restricted, which basically think of like a pledge. Someone says, I'll give you $100,000 a year for the next 5 years. You would record the present value of that $500,000 today, but you can't spend that money because you're not going to collect the money until year 2, year 3, year 4, and year 5. So that's temporarily, or it's with restriction, but it's time restricted. Or I could have something that's purpose restricted. Here's $100,000 to be used to set up a classroom in your school. So it's restricted for that particular use. And then you could also have permanently restricted funds or endowments. And remember, as Tania mentioned before, if you do have an endowment, that endowment is subject to NIPMFA, which is New York state law, and you have to make sure that you're following NIPMFA, because if you're not following NIPMFA, you're not following state law. Next page, one of the things that we believe is super important, as I said before, is looking at trend analysis and understanding some of the different indicators that exist within your organization. So looking at things like liquidity measurements, which is really the bankability of an organization. You really want to, if you have a need to potentially go out and borrow money, you want to make sure that you have the ability to pay down debt. So what liquidity, there are 2 ratios: working capital current assets minus current liabilities, and you have your current ratio, current assets divided by current liability. What that'll do is it'll show that you have enough current resources to liquidate the obligations as they come due over the next 12-month cycle. So banks typically want to see a current ratio of about 1.5 to 1. So that's what you should be striving for, is a current ratio of at least 1.5 to 1 or better. Program service percentage, we talked about that before, percentage of the funds that the organization spent in a program service capacity. That's on the statement of functional expenses. It says there the higher the better, but you have to really be careful. You want to make sure that you strike that right balance and that you're not sacrificing the infrastructure of the organization to kind of push up your program service percentage. So your program service percentage is really going to change based on the type of organization you have, the size of organization you have, the funding sources that you have. Typically, government-funded organizations have a higher program service percentage than organizations that rely heavily on fundraising. Organizations that bring in a high level of donated goods like food pantries and stuff tend to have higher program service percentages. So, it's good to really talk to someone and understand what's a good program service percentage for you as an organization. Days in cash is another good indication of liquidity. It looks at what it costs to run the organization on a daily basis, and then you can determine what your daily cash burn is, figure out how many days, how much cash you have divided by your cash burn, and that gives you days in cash. You typically want to see somewhere around 45 to 60 days in cash as a good benchmark. Expendable net assets, look at your net assets without restriction, and from that you adjust it. You pull out your fixed assets net of any debt associated with those fixed assets to find out what you have by way of expendable net assets. The reason that's important is if you have an organization that's heavily invested in buildings and fixed assets and things like that, you could have a really, really nice net asset balance, but all of that net asset is tied up in infrastructure and buildings, which you can't spend. So you could be asset rich, cash poor. So expendable net assets helps you to understand how much resources you have that are really expendable within the organization. And then the other piece of this is really understanding what the key indices are for your organization. So if you're a housing organization, you might be looking at occupancy rate. If you're a school, you might be looking at number of students, but you really should understand what the key leading indicators are for your nonprofit organization. Keep an eye on those leading indicators because they're going to give you a good understanding of the direction that your revenue is going to be moving in. And typically in the nonprofit world, revenue drives operations. So whatever's the important indicators for your organization, you really should understand what they are so that if you're starting to see a little bit of a lag in them, you could react, you can see what you can do to switch a toggle to kind of bring those levels up. And then I mentioned earlier, budget to actual reporting, and making sure that the board is getting appropriate budget to actual reporting with an understanding of why there are fluctuations.
Yep. So I'm going to jump into the 990. So we took some pages out of the 990 here and kind of gave a little bit of a checklist to, as a board, to help guide you reviewing the 990. So there's, the core 990 itself, and then there's schedules that get attached to the 990, and those schedules are based on how the questions are answered on the 990. So just want to pinpoint that there's a few different forms of the 990. This one we're going to go through is the full-blown 990. There's a 990 easy and a 990N. So the 990, this is required when the organization's assets are over 500,000 and revenue is over 200,000. So although the organization might not be subject to an audit or review, but they will definitely need to be filing a 990 or 990's easy or 990N depending on the activity, the revenue, or the assets of the organization. So this is the first page of your 990. It's a summary. Important items here right off the bat is describing the organization's mission or most significant activities. There's only a few lines here, but Schedule O is a catch-all for anything that spills over from the 990. So reading Schedule O in conjunction with the responses on the 990 is important to get the full picture of what's being provided. Your prior year and current year summary of your revenue, your expenses, and then your statement of financial position. So your current year activity is also linked to subsequent pages of the 990, but your prior year is what was reported on your prior year 990. So reviewing last year's 990 to make sure that that information is correct, or tying it back to your financial statements to make sure that the information is provided correctly. So this is a very important page for the 990 on how it can communicate, how the organization can communicate its program services, its accomplishments, how much money it spent on its different programs, the revenue generated from these different programs. So the 990 gives you the top 3 program service accomplishments that can be outlined here on the 990. So the information here is going to be taken from your statement of functional expenses in your program service column. So sometimes your financials might have just one program service column, but the 990 gives you the opportunity to break that out into several major programs for the organization. So having, starting at the top though, you have your mission again of the organization. There's a little bit more space there to again really communicate what the main mission, goal is, purpose of the organization. And then your programs down below. So this gives you a chance to put as much information as you need out there for how these programs made an impact to the community, how many meals the organization served through this program, what your outreach was. So this is very important because, donors look at this, they see the impact that the organization has with running its programs and using those dollars that are fundraised or received through grants to carry out those missions.
I think too often nonprofit organizations rely upon their accountants to fill this out. This is a great place where you can use this as a marketing tool. As Tanya mentioned earlier, that the 990 is open to public inspection. So to the extent that you can add some impact measurements within this section of the 990, I would definitely try to incorporate your marketing, your communication staff, your development staff, or whatever, into helping to put together this page of the 990 to really talk about the programs that you have in place and to really talk about the impact. And again, as Tanya mentioned, you can separate this out into multiple programs. You can put additional programs in Schedule O if you want, so that you can really talk to your donors with respect to the impact that you're having as an organization.
And it should be reviewed and updated on an annual basis. So what information you had there last year, again, if you put metrics in there, make sure it's reviewed and updated for the current year. So this is part 4 of the 990. It's, focusing on IRS filings and tax compliance. So it's a little bit small here on the screen, but generally it discloses how many employees the organization has. Did the organization comply with filing its 941 forms, the payroll tax returns? Did the organization have independent contractors? Did you properly, file your 1099s for the year? So information like that is important, is disclosed here. It also has information about providing donor receipts. So did the organization, this is common for fundraising events. So when donors, when attendees go to a fundraising event, they pay a ticket price. Portion of that is a donation. The other part is not the fair value for the ticket price. And so the organization is required to provide notice to the employee, to the donor, saying that this is the value of the donation. No goods or services were received in exchange for the donation. Did the organization comply with that, those donor letters? And that is one of the questions here. It goes to number 7. Some of the other information here, it's a lot of yes/no questions. Some may not apply to the organization, like from 10 down below is not relating to 501c3 organizations. So again, those will just be left blank. But again, just reading through these questions, making sure that if you have any, if you're unsure of how something should be answered, definitely, bring it up to the preparer or management. Another item here that I didn't mention before is asking if you need to file the 990T. So if an organization has any unrelated business income tax, it's okay to have that. Just keep in mind the significance of it to make it sure it's not a significant part of operations. But once your revenue from unrelated business activity is over 1,000, you're required to file that 990T. Another question here that's fairly common is, does the organization have any bank accounts, any foreign bank accounts? Because then that would be an additional compliance tax filing with the FBAR. So that those yes or no questions are listed here. So the 990 is pretty much saying, do any of these filing requirements apply to the organization? If so, were they filed?
I think really the form is really a page that allows you to kind of provide answers to make the government's job easier by writing yourself out.
Yeah.
Tanya, we only have about 18 minutes left, so.
Oh, okay. Governing body and management. So again, this is kind of linked to a lot of the stuff we talked about already, having policies in place. Section B lists the different policies that we talked about before: conflict of interest, whistleblower, compensation policies, document retention and destruction policies. Schedule O requires some explanation depending on if you put a yes or no to these responses. The disclosure down at the bottom, this is also very important. It's all about transparency. How does the organization make its governing documents available to the public? What states does the organization require to be filed with? So yes, as a New York nonprofit, you're required to file with New York State, but are you conducting business in other states, fundraising in other states? You may need to be reporting your 990 with those states as well. So this section lists your officers and board of directors. Every board of director, every person that served on your board at any point of time during this year should be reported on the 990. If they left the organization mid-year, beginning of the year, towards the end of the year, it doesn't matter. They need to be reported on here with their position, average, estimate average number of hours devoted to the organization serving in that capacity, and the different categories. So, you have your officers of the board, such as your chairman, your secretary, your VP, your treasurer. So there's specific positions that need to be checked off based on the position, the title of the board member, and also lists the officers of the organization as well. And importantly, also is their compensation. So what was the compensation of your executive staff? Are they what was on their W-2 for the calendar year? If any board member received a 1099 from the organization, what was that amount there reported on this form as well? It's also an idea to get an understanding of what a key employee is and a highly compensated employee is, because those are usually not, they're not going to be from your board. Highest comp employees are not going to be, your executive team. So being made aware of that. Your revenue. So this is a snapshot of your statement of activities. What are the different sources of funding that the organization brings in? So do you see that you're mostly contribution driven? Are you mostly program service driven, or do you have a good mix of the two? So seeing here is making sure that the organization has different sources of revenue to report on, so that there's not over reliance on one type of revenue source. And then ensuring this is also where you report any unrelated business income. So again, making sure that revenue is minimal in comparison to your overall revenue from the organization. Your statement of functional expenses. So Ken mentioned before, nonprofits report their expenses natural classification and functional classification. So this, again, outlines your total expenses by program, services, management in general, and fundraising. This, again, will mirror your statement of functional expenses. A lot of the categories that are on your statement of functional expenses may not be listed separately here. So that's where this other expenses here are good to include there that are significant to the organization. Again, keeping in mind that program service expense dollar amount in relation to management in general and fundraising, to make sure that it's at a higher amount. And this is your balance sheet or your statement of financial position. So again, this just shows at the end of each of the current year and the prior year what your cash balance, investments. It'll disclose if there's any loans to or from board members, executive, related parties that is identified on a separate line, the type of investments that you have, your different sources of liabilities. It also has your net assets with donor restrictions or without donor restrictions. So depending on what you have here, if you have a lot of information in other assets or other, liabilities, Schedule D to the 990 will break that out in more detail. This last page of the 990 is your reconciliation of net assets. So, and I should have mentioned before that not all revenue is reported on the 990. So revenue such as donated services, donated rent, that is something that's excluded from revenue and expenses on your 990. And so that information is a reconciliation that is added to this page or to Schedule D of the 990. This also gives you the opportunity to include any prior period adjustments. The bottom part here is also very important because this identifies the organizations, whether you're reporting on cash basis, accrual basis. Did the organization undergo a financial statement review, a financial statement audit? Was it on a separate basis? Was it consolidated with another organization? Is there oversight of this process of selecting an accountant? That's an important item to disclose on Schedule O and to, should be marked yes. It doesn't, if you don't have a finance committee or an audit committee, it's okay that the responsibility held is with the board in general. And then the last question here is, did the organization receive federal funds in excess of $750,000? If so, did it undergo that uniform guidance audit? So again, compliance-driven questions here, making sure that you're aware of what is required by the organization when you review the 990 to make sure these are answered correctly.
We've got about 12 minutes and about 12 slides, so I'm going to try to go really quick here. Sorry, everybody. So I told you we'd come back to fundraising. So part of, as I mentioned earlier, part of a board's role is to raise funds for the organization. I think what we find is that many board members don't feel comfortable making the ask. And I think, again, depending on the organization, a lot of organizations have the internal staff that can kind of help with that ask. It really comes down to kind of board members kind of working into what they do feel comfortable with and kind of working within their comfort zone. So it's not always about making the ask. It's also about making those introductions and being part of the ask process. Important to understand what role, I guess, each board member is going to be involved in the process of fundraising. Every board member is going to approach things differently. Every board member is going to have a different comfort level. So I think it's really important for the organization to kind of sit down with the board members and understand what role they're going to play and kind of where their comfort zone is, and to kind of work with them and kind of train and educate them on the process. I think part of what could help to make it easier is if the organization does a better job of, or does an effective job of maybe connecting board members with the organization's operations and missions. I think it's really important for organizations to bring program people to meetings, to have board members go out into the organization and meet some of the program people, see how the organization operates, get to understand and see the people that the organization is helping. The more insight board members can have, the more board members feel connected to the organization. I think the more effective board members become in that fundraising activity. And again, I think it also helps for board members to be able to tell the story. I think what you're looking at right now is you're in a situation where there are so many people that are out there looking to, so many organizations out there trying to raise money. So you got to find a way to kind of elevate yourself above that clutter or clutter. So I think really the more that board members really understand and can tell the story about the organization and where the organization is going to, the more that they can be educated and inspired, the better off they're going to be. So one of the things I kind of want to touch on here is that over the next 20 or 30 years, we're going to see the largest level of wealth transference that has ever occurred in this country as the silent generation and baby boomers start to pass away and that money gets pushed down to the next generations below. The statistics that I've heard is that somewhere between 11 and 12 trillion with a T, trillion dollars will find its way into the hands of nonprofit organizations. So the question is, how can you get your share of that money, and what are you doing in terms of really starting to understand and educate and communicate with your donors, and identifying which of your donors might be appropriate donors to have these types of conversations with. What happens if you have older donors who are significant donors to the organization? What happens if they pass away? Have you developed connections with their families to ensure that the money or that funding will continue to your organization? So there's a lot of things and strategies you got to think about right now. The other thing to think about is that the landscape of fundraising has changed. Back in the year 2000, about 70% of all individuals gave donations to nonprofit organizations. A lot of those donations were smaller, $50, $100 donations. A lot of that's gotten squeezed out now. And the number of people who are giving to nonprofit organizations is no longer up at around that 70% level. It's closer to a 50% level. So you've got less people giving to charity, yet charitable donations are higher than they were 20 years ago. And I think what you're finding is that you have more larger donors making contributions to organizations. And since you have more larger donors making contributions, you really need to be in a situation where you have access to and you're able to tap into some of those larger donors. I know that's harder for smaller organizations, but you got to kind of figure out how to make that work. Next slide, Tanya. So from an engaging, again, you have to, as a board member, you need to prioritize fundraising, keep fundraising as a key focus at meetings and stuff, so the board understands it's if there's a need and there's an emphasis that needs to take place. You need to build personal connections, involve board members in some of the hands-on mission activities and stuff, so the board members can better kind of tell the story. Start small, begin with manageable tasks that board members can do, and then ultimately work your way up to kind of a higher level when the board member feels more comfortable. And then again, it's all about leading with passion and inspiration. We talked earlier about board engagement and how do we build deeper engagement within the board. I think some of it is, same way you build deeper engagement within any organization or within any employment area or whatever. It's fostering and developing relationships. It might make sense to have board retreats, have informal gatherings to build bonds, team building, whatever you need to do in order to kind of get that board to come together and gel as a board. You want to make sure that you've got good communication, and that's good communication between board members so that there's regular communication taking place, communication between the board and the various committees that exist, and communication between the board and key members of management. If you've got that good flow of information, it helps to keep the board members engaged because they know they're getting information. They know that they have responsibilities and everything else. Establish accountability. We talked about the board agreement at the very beginning of this presentation. You want to make sure that you clearly define roles and that there's some level of assessment of performance on a regular basis, as I mentioned earlier. The board doesn't just necessarily assess the CEO, they really need to assess themselves also. Celebrate wins, to the extent there are positive things happening, contributions coming in, whatever, celebrate those at the board meetings. That helps to boost morale. Again, continue to find and develop talent. We'll talk a little bit more about diversity, but really each board member should be looking when they're ready to leave the board, they should be looking to try to help to identify their successor. Encourage charity and volunteering. The more individuals volunteer for your organizations, the more they are engaged with your organization, the more they learn about your organization. So again, having board members get involved in some aspects of volunteering within the organization kind of helps to build that board engagement. You have to have effective meetings. Meetings should not be 3 hours long. You should have consent agendas set up where the board understands up front what they're going to be voting on, so that it makes the vote and what do you call it? motion is already kind of laid out within that consent agenda, so it becomes a much easier process, helps move things along. Anything you can do to help create efficiencies within board meetings is going to help to create engagement. Again, the committee structure in between board meetings is super helpful to keep board members engaged. More collaboration, you know, any sort of digital tools for continuous engagement should make it easy for board members to find stuff. If you have the certificate of incorporation, bylaws, all that stuff should be kind of housed in a Dropbox or a program like Bell's Board or something like that, that kind of holds all of the key elements and key documents to make it easy for board to find things. And then regular board evaluations, assessment. Is the board effective? Is the board not effective? What could the board be doing better? Are people satisfied in their board involvement? Ask the questions. If you don't ask the questions, you're not going to get the answers. A couple other quick points I want to talk about over the next 3 minutes is with board members getting older, we've seen a lot of boards where you have people who have been sitting on the board for the last 20, 25 years. It might make sense to try to bring some new blood into the organization, some younger blood, a different thought process, different way of thinking. You always want different perspectives. So if you're going out and trying to bring on younger board members, millennials and Gen Zs, you know, why it's important for have them on the board, they bring in fresh ideas, right? They're more innovative. They have a lot more digital expertise than older board members. They're much better at social social networking and things like that. They're very, very big on social responsibility. So, you know, these are the people you want. This is the future leaders. And these are also some of the people who are going to be inheriting some of the money coming down the line. So you really want to try to find ways that they can kind of to bring them into the organization. They'll be able to leverage social media, provide more authentic messaging to enhance engagement. They'll be able to talk to some of the other younger generations out there when they're going out for the asks and things like that. So it's really important to start recruiting millennials and Gen Zs to your nonprofit board, especially since they're a much bigger portion of the workforce today than other generations. And then the last slide I kind of want to go over in terms of information is I think we're seeing a changing face of the board of directors. It used to be board of directors were brought on because they were power board members. They were able to attract and bring in donors or make large donations themselves. But I think you're seeing the dynamics of the board has changed. It's important for boards to be reflective of the people and communities that the organization is serving. It's important to have different voices, perspective, and life experiences on the board of directors. It enhances the discussion that takes place at the board level. And it makes for more meaningful discussions, different thought processes that you may not have thought about because you're not there in the community. You don't have the boots on the ground that some of the other potential board members may have. So you really want to make sure that your board is really reflective of the communities that you're serving. Again, it drives better decision and deeper community connection, spurs innovation, avoids groupthink, broadens the recruitment and retain diverse voices. All of those things are super important with respect to the board today. It definitely helps to ensure that the mission and the delivery of services and everything else that you have as an organization are going to be much better and much more reflective of the needs of the community. So that's pretty much what we have. As I said, we will be sending out a copy with the recording of the board guide, and we'll also be sending out a copy, if you go to the next slide, of the updated nonprofit fundraising guide. If you go through that stuff and you have any questions, please feel free to reach out to us and ask. We really appreciate your time and attention. If you need to get in touch with us, Tania, there we are. We will, as part of the package, send you out these PowerPoint also. So again, thank you everybody for attending. I know it was a little rushed at the end. I apologize. If anybody has any ideas for future topics, please let us know. We definitely want to incorporate those in. Be on the lookout. In January, we're going to be doing our annual 2025 trend guide and webinar. So that'll take place. The guide will come out beginning of January and the webinar will take place towards the end of January. So definitely stay on the lookout for that. We are going to be offering CPE for today. If anybody needs CPE, please get in touch with us, and we'll make sure that we'll get you an evaluation form. You're going to have to fill out an evaluation form if you're going to be getting CPE, and we'll make sure you get the CPE. And everybody just have a happy and healthy holiday season, and we thank you for being part of today's presentation. Thanks, everyone.
Thank you.